Hey, how's it going, everybody? My name is Troy Hackett, and today we'll be going over a ABC costing question for managerial accounting. By the way, I am the head TA for the managerial accounting class at Cornell under Professor Paz, and yeah, let's get right into it. So ABC costing, honestly, one of those topics where it is difficult, or it's not really difficult, but it's very, very time consuming. Right? It's a lot of number crunching, but I don't think the concepts are inherently difficult. So if you're able to just plug away on the exam, plugging in numbers, and you know what you're doing, you should be fine. But the problem is that certain kids on the exam, they don't really know what they're doing for ABC costing. They're kind of struggling, and by doing that, they're burning a lot of time, and then they don't have enough time to finish the exam, and they get a much lower score, right? So you don't want to do that. ABC costing is one of those questions. It's a home run question where you can get 25 out of 25, and it should be able to boost your exam grade compared to others, right? So for this question, this is from the practice prelim. Melissa produces and sells to wholesalers a variety of trail mix by the pound. Information on overall performance and by product line is reported below. For the analysis of product line profitability, Melissa uses a traditional volume-based product costing system, and overhead is applied to products as a percent of direct labor cost. Okay, so what they're saying here is that before ABC costing, Melissa used a traditional based costing. She only based her overhead costs by labor cost, right? And that's a bad idea, right? Because that means if you're only basing it off of one figure, your overhead costs aren't going to be allocated very well. Whereas with ABC costing, you're using multiple figures to help you figure out your overhead or how to allocate those overhead costs, which is going to make them more accurate in general if you do it correctly. So they give us a bunch of figures here, and then it says Melissa is very disappointed with the profitability of her business. Before producing organic, she had a gross profit margin of 10%, which was her goal. She is considering offering only organic and dropping the two other products. Before dropping products to focus on organic, she collected the following information which she intended to use to estimate ABC costs. She identified 3 ABC overhead cost pools: purchasing, setup, and quality assurance. So basically what she's doing now is she's breaking up her overhead costs into separate categories. By doing that, if you're doing it correctly, you should be able to make your costs more accurate. And maybe Melissa here can see that perhaps organic is more profitable than she thinks. Maybe she's just not allocating her overhead costs correctly. So after some cost behavior research, she compiled the following data on the key activities that relate to the ABC overhead cost pools and product lines. So for example, she finds out the amount of purchase orders for each division, and she finds out the number of batches and number of quality assurance hours for each division. So using the ABC costing system, what is the total overhead cost that will be assigned to each product line? To use ABC costing system, we're not going to change the direct material or the direct labor cost. What we are going to change is the overhead cost. And this figure right here, this 300K, which was broken up by direct labor costs, or basing it on the proportion of direct labor costs, we'll be basing it off of quality, setup, and purchasing now instead of labor, right? Which should theoretically make it more accurate. So what we're going to do is, our first step is we are going to take the total number of purchasing orders, or we're going to take the cost of purchasing, dividing it by the amount of purchasing orders, which is going to get us, I believe it's going to be 75, but I just want to double check here. It's 750, I was off. So we get 750. So this is purchasing orders. So that is how much it costs per purchasing order, okay? And now we're going to do that as well for setups and quality, right? So setup, 100,000 divided by 100, we're going to get 1,000. So that's setup. And then we're going to do quality, right? So quality is going to be 50,000 divided by 1,000, and we are going to get $50. So now we found those costs per purchase, per setup, per quality. And now what we're going to do per division is, for example, we're going to write down organic. And we're going to take these figures right here, the 120, the 40, and we are going to take those figures to multiply it by the per purchase, per setup, and per quality, right? So for example, 120 times 750 plus 50 times 1,000 plus 200 times 50, okay? And that's going to get us $150,000, okay? So that is our new overhead cost, and we compare that to the previous overhead cost for organic. It was only $60,000, right? So I'm going to highlight it. It was previously $60,000 under the old method, and now by using a new method of calculating these overhead costs, by breaking down these overhead costs into separate departments, we're able to figure out that organic, which was incurring very little overhead costs beforehand, is actually incurring much more overhead costs, over 200% of what we actually thought, or 150%, I believe. Now let's do that as well for natural and basic, and it's pretty much the same thing. I'm not going to talk much because I don't believe there's much to be explained here. We are going to get $100,000 for basic. So those are our new overhead costs per division, or each product line. So they say product line here. Right here, they're calling each of those product lines. Okay, so we figure that out. So 2.2, it says identify which products are undercosted or overcosted by the traditional volume-based cost system. Why do you think those errors arose within the traditional cost system? So what we're going to do is we're going to write traditional here, and we're going to write ABC here, and then we're going to write organic, natural, and basic on the top here. Organic, natural, basic. Okay, put lines there. And traditional numbers was 60,000, 60,000, 180,000. And what we're doing here is we're writing out these numbers so we can compare it easier from traditional to ABC costing. Okay, so now 150, 50, 100, 150, 50, 100,000. Okay. So now, as you can see, comparing traditional to ABC costing, traditional undercosted here, and they overcosted here, okay? So under the traditional base costing system, organic was undercosted by a lot, by $90,000. But for natural and basic, they actually benefited from the traditional base costing system, or they didn't benefit. They were deterred, right? Because they were their overhead was overcosted, right? For the natural, they paid $10,000 too much for their overhead. And for basic, they were allocated $80,000 more overhead than they were actually spending. And it says, why do you think those errors arose within the traditional cost system? And the reason why that occurred is because you can't allocate overhead costs just by a percentage of labor costs, right? So it says here, beforehand, they allocated labor, or they allocated overhead by % of direct labor costs. And that's just not going to be accurate, right? If you're doing all these separate tasks in overhead, you can't base it off of one cost figure. You got to break it down, which what we did here for ABC. You got to break it down by purchasing, setup, and quality, right? You can't just do it by one cost figure. You got to break it up a lot more, or else those numbers or the overhead allocation is just not going to be very accurate. So now for 2.3, it says using your ABC overhead costs and the original data on sales and direct costs, compute the total gross profit of each product line. And what we're going to do here is we can see that we're going to take out these numbers here. So I'm going to write in black actually, so it's going to make it a little bit easier for us to see, but we're going to take out these numbers here and we're going to replace them with our ABC costing figures, right? So this one will be 150K, this one is going to be 50K, and this one is going to be 100K. So basically we're going to take the revenue minus direct materials minus the direct labor minus the overhead, and that did not work out very well. I don't know why my mouse is being weird, but I'm going to write it out for you guys. I'm going to put this in white. So for organic, we're going to do 180K, so that's our revenue, minus all of our costs. So direct materials, 60K minus direct labor, 16K minus overhead, which is $150,000. And we get negative 46K, okay? And when I say K, I mean thousands of dollars. So we're gonna do that for natural and basic as well. We're gonna get 62K, okay? So basically, under ABC costing system, we figured out that organic is actually operating at a loss. Same with natural, and basic is actually operating with a gain. They're making $62,000, okay? So now it says, for the following questions, assume ABC costs are accurate and treat each question independently. So it says, explain what would have happened to profits if Melissa had dropped basic and natural, which she is considering. So if you look up here, basic and natural, if she dropped those lines, it would be a complete and utter disaster, right? Because basic in reality is her cash cow, right? It's what's actually bringing in the money for her company. If she dropped basic, she would basically kill off her cash cow and she would be operating at a heavy loss. Same with natural, right? Because even though natural is operating at a loss, if you cut that product line, you'll be still incurring a lot of those fixed costs. Therefore, it's probably not a good idea to cut off natural as well. You want to keep those two divisions or two product lines operating, especially basic, which is her most profitable product line. Now, organic is a different story. Organic is operating at a heavy loss. So it might be a better idea to drop that product line. But that's not what this question is actually asking here. But because it's operating at a much heavier loss, it might be a good idea to drop it even with fixed costs being incurred. For the last part, 2.5, suppose against your recommendation, Melissa drops the products that are identified as unprofitable by the ABC costing system. Given what you know about cost behavior, how much in cost savings will she realize immediately? So, I talked about this a little bit earlier, and basically if she dropped her unprofitable lines, it would probably not be a good idea. Even though for organic, she is operating at a heavier loss, by operating that line, you're able to cover the fixed costs at least, right? And if she dropped those lines, the fixed costs are still going to be incurred and she'd be actually losing more money than if she continued operating, right? So she should continue operating all those lines, especially her cash cow, which is the basic product line. So that was quite a lot of material. I probably, mixed up some words there, but I think not a terribly hard concept, just a lot of number crunching. And on the exam, Professor Paz doesn't really change the way he writes these questions, right? I mean, there's only so many ways you're gonna write an ABC costing question. You can't really make it that tricky. So if you know the steps, you know what numbers to crunch, you're basically good to go. So I hope you guys enjoyed this video. Let me know if you got any questions. Just drop a question down in the comments if you do have a question, and good luck on your exam.